Hello friends, what if I told you that the reason you're not profitable has nothing to do with your entry? Think about it. How many hours have you spent searching for the perfect setup, the perfect indicator, the perfect strategy? You told yourself, if I can just find the right entry, everything will change. But then the market proved you wrong, again and again and again. You entered too early, you exited too late, you hesitated when you should have acted. You acted when you should have waited. And every loss felt like evidence that something was missing. But what if the missing piece isn't on the chart? What if the market has been showing you the same lesson all along? Let me tell you something. The most profitable traders in the world don't win because they can predict the future. They win because they think differently. In this video, you'll discover why consistency comes from psychology, not prediction, how fear, greed, and the need to be right secretly control your decisions, and why your mind matters far more than your entry. Because this is not about the market, this is about you. Chapter 1, the setup is not on the chart. What if everything you've been chasing is the very thing keeping you stuck? Think about the last time you lost a trade. Maybe you stared at the chart afterward, zooming in and out, searching for the mistake. Maybe you blamed the entry. Maybe you blamed the market. Maybe you told yourself, I need a better setup. And so the search began again. Another indicator, another strategy, another promise that this one would finally be different. But let me ask you something. If a profitable setup was all it took, why are there traders using the exact same strategy getting completely different results? Why does one trader execute with confidence while another hesitates? Why does one follow the plan while another abandons it the moment fear appears? Understand this. The chart is not where the real battle happens. The real battle happens inside your mind. Every day, the market presents opportunities. Every day, the market presents uncertainty. And every day, traders bring their fears, hopes, expectations, and insecurities to the screen. The market doesn't create those emotions. It reveals them. It exposes them. It magnifies them. You see, most traders believe profitability is hidden somewhere on the chart. They believe the next pattern, the next confirmation, the next perfect entry will finally solve everything. But years pass, the indicators change, the strategies change. The losses remain because the problem was never the setup. The problem was the person executing it. Let me tell you something that most traders never want to hear. Your biggest losses are often not caused by bad analysis. They're caused by emotional reactions. Fear tells you to exit too early. Greed tells you to stay too long. Ego tells you to prove you're right. Hope tells you to ignore reality. And suddenly what started as a simple trade becomes an emotional roller coaster. The chart didn't do that. Your mind did. This is why two traders can see the exact same setup and get completely different outcomes. One sees probability. The other sees certainty. One accepts risk. The other fears it. One follows the process. The other follows emotion. Same chart. Different mind, different result. Mark Douglas understood something that changed trading forever. He understood that consistency is not created by predicting what comes next. Consistency is created by learning how to think when you don't know what comes next. And that changes everything. Because the market has never promised certainty. It never will. Yet traders wake up every morning demanding certainty from an environment that cannot provide it. And when the market refuses, frustration begins, anger begins, doubt begins. The cycle repeats again and again. But what if there was another way? What if profitability had less to do with finding the perfect setup and more to do with becoming the kind of person who can execute any proven setup with discipline? Because once you understand that, the game changes. And in the next chapter, you're about to discover the hidden addiction that silently destroys more traders than bad strategies ever could. Chapter 2, the addiction to being right. Have you ever noticed how a losing trade can feel like a personal attack? Not because of the money, not because of the setup, but because it proved you wrong? And that feeling, that uncomfortable feeling, is where one of the biggest trading addictions is born. Most traders believe they're addicted to making money. They're not. They're addicted to being right. Think about it. The market starts moving against your position. Your stop loss is right there. The plan is clear. The risk is defined. But suddenly, a voice appears inside your head. Maybe it will come back. Maybe I should give it more room. Maybe the market is wrong. And before you know it, you're no longer managing a trade. You're defending an opinion. Understand this. The moment your ego becomes attached to a prediction, objectivity disappears. The trade is no longer about probability. It's about identity. It's about proving that you're smart enough, skilled enough, and right enough to outsmart the market. But the market doesn't care. The market doesn't reward confidence. It doesn't reward opinions. It rewards discipline. And that's a painful truth for most traders to accept, because being wrong feels uncomfortable. It challenges the image we have of ourselves. It forces us to admit that uncertainty exists. And the human mind hates uncertainty. It craves control. It craves certainty. It wants guarantees where none exist. This is why traders hold losers longer than winners. This is why they move stop losses. This is why they revenge trade after a loss. They're not trying to make money anymore. They're trying to repair their wounded ego. Let me tell you something. Every time you refuse to accept a small loss, you're sending yourself a dangerous message. You're telling yourself that being right is more important than protecting your capital. And over time, that belief becomes a habit, a destructive habit. The market becomes a courtroom. Every trade becomes a verdict. Every loss becomes evidence against your self-worth. And suddenly, trading becomes emotionally exhausting. You celebrate being right more than following your process. You fear being wrong more than breaking your rules. And that's when consistency begins to disappear. Mark Douglas taught that successful traders think differently. They don't define themselves by individual outcomes. They don't need every trade to validate them. They understand something most people never learn. A loss is not a personal failure. A loss is simply part of the probability game. It means nothing about you. It means nothing about your intelligence. It means nothing about your future. It is just one event in a long series of events. That's it. Nothing more, nothing less. The moment you truly accept that, something remarkable happens. The emotional weight begins to disappear. You stop fighting reality. You stop arguing with the market. You stop needing every trade to prove your worth. And for the first time, you begin to see opportunities clearly. Not through the lens of ego, but through the lens of probability. But even after letting go of the need to be right, another enemy remains hidden in the shadows. An enemy that causes traders to freeze when opportunity appears and panic when risk becomes real. And that enemy is fear. Chapter 3. When fear hijacks the setup. Imagine this. The setup is perfect. The conditions match your plan. The risk is defined. You have seen this opportunity dozens of times before, and yet your finger freezes above the mouse. Your heart beats a little faster. Questions begin flooding your mind. What if this one fails? What if I lose again? What if the market turns the moment I enter? And just like that, the opportunity passes without you. Later, you watch the trade move exactly as expected. You stare at the screen in frustration. You feel anger, regret, disbelief, not because the market tricked you, but because fear did. Let me tell you something. Fear is one of the most misunderstood forces in trading. Most traders think fear is the enemy. It isn't. Fear is simply information. It is a signal, a reflection of something happening inside your mind. The real problem begins when fear starts making decisions for you. Because once fear takes control, logic disappears, discipline disappears, and suddenly you're no longer trading your setup. You're trading your emotions. Think about how many opportunities you've missed because fear convinced you that danger was everywhere. Think about how many trades you've exited early because fear whispered that profits might disappear. Think about how many times you've reduced your position size on a quality setup, only to watch the market move exactly as planned. Fear doesn't always scream. Sometimes it whispers. Sometimes it sounds reasonable. Sometimes it disguises itself as caution. But underneath it all is the same message. Protect yourself. The problem is that trading requires something most people struggle to do. It requires acting in the presence of uncertainty. Your brain wants guarantees. The market offers probabilities. Your brain wants safety. The market offers risk. And that conflict creates emotional tension. This is where most traders lose the battle. They believe confidence comes before action. They think they need to feel certain before they can execute. But confidence is not the absence of fear. Confidence is the willingness to act despite fear. Understand this. Every professional trader experiences uncertainty. Every professional trader experiences doubt. The difference is that they do not allow those emotions to dictate their behavior. They accept them, they expect them, they move forward anyway. Mark Douglas often emphasized that fear comes from believing you need to know what happens next. Think about that for a moment. If you believe your success depends on predicting the next outcome, every trade becomes emotionally charged. Every loss becomes threatening. Every decision becomes stressful. But when you truly accept that any single trade can win or lose, something changes. The pressure begins to disappear. The fear begins to weaken because your focus shifts away from outcomes and toward execution. The goal is no longer to avoid losses. The goal is to follow your process. Trade after trade, day after day, win or lose. This is where everything changes. Because a trader who conquers fear does not become fearless. They become accepting. They stop demanding certainty from an uncertain environment. They stop fighting reality. They stop trying to control the uncontrollable. And once that happens, a new perspective emerges. A perspective that separates consistent traders from everyone else. The ability to think in probabilities instead of predictions. And that is where the real transformation begins. Chapter 4, Thinking in Probabilities, Not Predictions. Picture two traders sitting in front of the exact same chart. They see the same candles, the same setup, the same market conditions. One trader is calm, focused, and ready to execute. The other is anxious, stressed, and desperately searching for confirmation. What is the difference? Knowledge? Experience? Intelligence? Not necessarily. The real difference is how they think. One trader is trying to predict the future. The other is thinking in probabilities. And that single shift changes everything. Most traders enter the market believing their job is to know what happens next. They think success comes from accurate predictions, so they spend years searching for certainty. They analyze every candle. They study every indicator. They consume endless information, all in an attempt to eliminate uncertainty. But the harder they chase certainty, the more frustrated they become. Why? Because certainty does not exist in the market. The market can do anything at any moment. It can move up, it can move down, it can do something completely unexpected. And no amount of analysis can change that fact. Let me tell you something. The moment you believe you know what will happen next, you become vulnerable. Vulnerable to disappointment, vulnerable to fear, vulnerable to emotional reactions. Because when reality fails to match your expectations, frustration takes over. Suddenly you're questioning your strategy, questioning yourself, questioning everything. But professional traders approach the market differently. They understand that every setup is simply an opportunity with a probability attached to it. Nothing more, nothing less. They don't expect certainty. They don't demand guarantees. They know that even the best setup can fail. And because they accept this truth, they remain emotionally balanced when losses occur. Think about a casino. A casino does not know the outcome of the next hand. It does not know who will win the next spin. Yet casinos generate consistent profits year after year. Why? Because they understand probability. They understand that individual outcomes are meaningless when viewed in isolation. Their focus is not on the next event. Their focus is on the long series of events. This is exactly how profitable traders think. They stop obsessing over individual trades. They stop assigning emotional significance to every outcome. Instead, they focus on executing their edge consistently over time, win or lose, gain or loss, success or failure. The process remains the same. This mindset creates freedom. Freedom from fear, freedom from hesitation, freedom from the emotional roller coaster that traps most traders. Because once you accept that any trade can lose, losing stops feeling personal. Once you accept uncertainty, uncertainty loses its power over you. Mark Douglas understood that consistency begins when traders stop trying to predict and start learning to trust probabilities. It begins when they accept that outcomes are random in the short term, but predictable over a large sample of trades. This is where emotional stability is born. This is where confidence becomes real, not because you know what will happen next, but because you know you can handle whatever happens next. And once a trader learns to think this way, another realization emerges. A realization that separates dreamers from professionals. Because understanding probabilities is powerful, but without discipline, that understanding means nothing. And in the next chapter, you'll discover why discipline is the bridge between knowledge and consistent profitability. Chapter 5, the discipline behind every profitable trader setup. Imagine waking up tomorrow with access to the perfect trading strategy, a strategy with a proven edge, a strategy that has already made countless traders successful. What would happen next? Most people immediately think their problems would disappear. They imagine consistent profits. They imagine confidence. They imagine freedom. But let me tell you something uncomfortable. Most traders would still fail. Not because the strategy is flawed, not because the setup doesn't work, but because discipline would still be missing. And without discipline, even the best edge in the world becomes useless. Think about it. How many times have you known exactly what you were supposed to do and failed to do it anyway? How many times have you moved a stop loss even though you promised yourself you wouldn't? How many times have you taken a trade that wasn't part of your plan because it looked good? How many times have you overtraded after a win or revenge traded after a loss? The problem wasn't knowledge. The problem was execution. This is one of the hardest truths in trading. Success is rarely determined by what you know. It is determined by what you consistently do. The market rewards behavior, not intentions, not promises, not motivation. Behavior, day after day, trade after trade, when nobody is watching, when emotions are running high, when uncertainty is everywhere, that is where discipline matters most. Understand this. Discipline is not about forcing yourself to be perfect. It is about creating trust between you and yourself. Every time you follow your rules, you strengthen that trust. Every time you break them, you weaken it. And over time, that trust becomes the foundation of confidence. Real confidence does not come from winning trades. Winning trades can be random. Real confidence comes from knowing that regardless of what the market does, you will follow your process. That's a completely different level of certainty. Most traders spend their careers trying to control the market. Professional traders focus on controlling themselves. They know they cannot control outcomes, they cannot control volatility, they cannot control unexpected news. But they can control preparation. They can control risk. They can control execution. And that focus changes everything. Let me tell you something. Discipline becomes easier when you stop thinking about individual trades and start thinking about identity. Instead of asking, will this trade make money? Ask, what would a disciplined trader do right now? Instead of chasing outcomes, focus on becoming the person capable of producing those outcomes repeatedly. Because profitable traders don't just have better strategies, they have stronger habits, stronger standards, stronger emotional control. They understand that every decision is casting a vote for the person they are becoming. One rule followed, one emotional impulse resisted, one trade executed according to plan. These small moments seem insignificant, but over months and years, they create extraordinary results. This is where consistency is born, not from predicting markets, not from discovering secret indicators, but from disciplined execution under uncertainty. And once discipline becomes part of who you are, something remarkable begins to happen. The emotional chaos starts to disappear. The struggle against the market starts to end. And that leads to the final transformation every trader must experience before true consistency becomes possible. Chapter 6, the trader's final transformation. One day something strange happens. The market hasn't changed, the charts haven't changed, your strategy hasn't changed. Yet everything feels different. The losses no longer shake your confidence. The winning trades no longer inflate your ego. The emotional roller coaster that once controlled your life begins to disappear. And for the first time, you realize the transformation was never about the market. It was about you. Think back to where most traders begin. They enter the market believing success is hidden inside a secret strategy. They chase indicators, they chase predictions, they chase certainty, they believe profitability is something they must find. But after enough losses, enough frustration, and enough painful lessons, a deeper truth begins to emerge. Profitability is not something you find, it is something you become. Let me tell you something. The market has been teaching you the same lesson from the very beginning. Every win, every loss, every mistake, every emotional reaction. It was all pointing toward one realization. The market was never your opponent. Your fear was, your ego was, your need for certainty was, your inability to accept risk was the market simply revealed what was already inside you. It showed you your fear, it showed you your impatience, it showed you your need to be right, it showed you the truth, and the truth is often uncomfortable. Because transformation begins the moment you stop blaming the market and start taking responsibility for your own thinking. This is where everything changes. You stop looking for perfect entries. You start focusing on perfect execution. You start trusting probabilities. You start fighting uncertainty. You start accepting it. And as these shifts occur, a new version of you begins to emerge. A calmer version, a stronger version, a more disciplined version. The trader who once panicked during losses now remains composed. The trader who once hesitated now executes with confidence. The trader who once chased opportunities now patiently waits for them. Not because the market became easier, but because they became better. Understand this. Consistent profitability is not a destination. It is a byproduct of emotional mastery, a byproduct of disciplined thinking, a byproduct of accepting reality exactly as it is. Most people never reach this stage because they continue searching outside themselves. They keep looking for answers on the chart while ignoring the battlefield within. But the traders who succeed eventually discover the secret. The edge was never the strategy. The edge was never the indicator. The edge was never the prediction. The edge was always the mindset behind the execution. This is why Mark Douglas's message remains so powerful, because he understood that the market is uncertain, but your behavior doesn't have to be. Your emotions don't have to control you. Your fears don't have to define you. Your past mistakes don't have to determine your future. The moment you fully accept risk, embrace uncertainty, and commit to disciplined execution, you cross a line that most traders never cross. You stop acting like a gambler. You stop thinking like a victim. You stop reacting like an amateur, and you begin operating like a professional. Not because you know what will happen next, but because you no longer need to know. And when you reach that point, something remarkable happens. You finally understand that the greatest profitable trader setup was never on the chart. It was in your mind all along.